We're going to discuss sort of the technical part of the admissions process. It is daunting just to go through the college admissions process. So it's a huge and important process for a student. It's 4 years of your life, but it can pave the foundation for the next 50, your career. So choosing the right college is a big deal. And this is the second of a 10-part series. So all about the details of college admissions and college advice. So this is a big investment. So the question for tonight is, how are you going to pay for it? So I welcome parents from these three high schools: Townsend Harris, Forest Hills High School, and Brooklyn Tech, and other high schools as well. If I omitted a high school, then I apologize. So a little bit about myself. I actually was a recruiter for the University of Michigan for 20 years. And I coordinate with the admissions office. I go to different high schools. I present information. I take questions. So I've built a reserve of knowledge, and I've had a specialty in all aspects, but a special financial aid and providing private college advice. I've been doing it for many years. So if you have any questions or want to retain our services, Kweller Prep, we do a great job. We have a very strong college advice team led by myself. So I'll make sure that you have an excellent outcome, or we'll put the effort in to get that outcome. So just a quick overview. So it's just an overview of financial aid first. Then we'll talk about the FAFSA and the CSS profile. Those are the two financial aid forms. And I'll discuss the net price calculator, and then I'll sprinkle in some insights along the way. This is the contact information. So feel free to either call or email us, either myself or Kweller Prep itself. So it's Bill, college counselor at kwellerprep.com, and that's the phone number. So this is actually part of a series. I'm gonna actually put this series in here. So we're actually the second one right here. So mark your calendars. You obviously no one's obligated to all of them, but you can pick and choose. Let me actually put this in the chat. Okay, there we go. Okay, a lot of parents are probably in sticker shock. I mean, your child is applying to college, and you know the bill's going to come, and it's very daunting. It's scary, the cost of private college, particularly. That's the bad news. There is a lot of good news in the financial aid department. So many of the colleges, especially the more selective colleges, are very generous with financial aid. So at the end of the day, it is going to be, in all likelihood, very affordable. And that's the thrust of what we'll be talking about tonight, is how it's made affordable and what you can expect. So there's a process there that really is a fair process for the most part. So these are some examples of the costs. One of the things that I'm going to touch on at the end of this presentation is that the state universities are not necessarily cheaper. The sticker price is much lower. Look at Cornell's $83,000. This includes tuition, room and board, all the expenses. But Stony Brook is $31,000. But with financial aid, believe it or not, Cornell and other private universities can actually be less. So that's one of the important messages for tonight. So yeah, that's the price difference. So it does appear to be less. Of course, the state universities are subsidized by the state, so everyone gets the discount. So from the state of New York's perspective, the typical student is getting a $30,000 tuition grant. Everyone's getting that. The issue is that the state universities, once you get that $30,000 off of the tuition, and that's a theoretical number because you're only paying the tuition is like $12,000. It's hard to get past that. So they're a little bit reluctant to go past that number, the $30,000 off. It can be reduced, but it's not as easy as at a private college. So this is what I was referring to about the sticker price. So the full price is seldom paid. 60% of families receive financial aid to help pay for college. And for private colleges, especially the ones that are more selective, the average grant, that's a need-based grant. So grant you do not pay back. That's not a loan, and it's very generous. It averages about $40,000. It can be a lot higher depending upon your income and your assets. So that's something that we're going to talk about, how they arrive at that number. That's called it has to do with the expected family contribution. Yeah, so that's the good news. This is kind of an overview. We'll quickly talk about just kind of introducing some of the terms. We'll look at the two financial aid forms, the net price calculator, what to expect when your student is admitted in the financial aid package that comes along with the admissions letter. And we'll talk about something about how financial aid, this is a common question that parents raise, is how does applying for financial aid or receiving financial aid affect my students' chances of admission? So we'll talk about that also at the end. So just some vocabulary. So these are terms that are going to be used. So it's important to get an understanding of this. So the expected family contribution is is a measure of what a family can truly afford to pay. So it's not guesswork. So there are two ways that private colleges, can calculate this number. So that's the main result of the financial aid forms. So the FAFSA, which is the federal form, that's generally looking in favor of the family, and then there's the private colleges run the CSS profile, and that's more detailed. It's a longer form. There's a lot of details about assets, and they look at 2 years rather than 1 year, and that also is attempting to get an estimate of what you truly can afford to pay. So generally speaking, that number is actually fair. Now, one of the things that the sticker shock part of it is families that have been educating their children in public schools have never contributed to tuition. So that's the big leap. Private school parents, they're used to it, so it's not as much of a shock. So that's the thing. I mean, it is something that seems like a lot of money at first. But what I always say is the expected family contribution, sometimes it's hard to wrap your mind around it, but it is something that it's calculated on what you can truly afford, even though you're not used to it. And the other thing is it's an investment. And what's more important investment than your child? So that's two ways that you have to look at it from kind of an objective point of view. So that's EFC. The net price is a legally defined term. And we're going to talk more about that, but it's basically the full price minus the need-based grants. And then a grant is something you don't have to pay back as opposed to a loan. So any questions, you could just fire those off in the chat. So let's start with the sticker price. So again, most parents are not going to pay this, but it has to be a stake in the ground. And some parents do. I mean, at private colleges, it's like 40-50% pay the full price because they can afford it. So it's the total cost of attendance. So it includes everything. So it includes tuition, of course, that's the most of it, room and board, books, travel, pocket money, entertainment, things that what your student will need, just living. So it's $75,000. So that's how it breaks down, as I discussed it. So the tuition the most selective schools, this is pretty much what it looks like. This number does vary a little bit, but on average for the selected schools, this is kind of how it's breaking down. Now this is a lot of parents who are new to this and don't take a step back and realize this. This is kind of actually shocking. Because you buy a car or a toaster oven, when you buy something that has greater value, you pay more for it. So a Porsche is going to cost more than a Volkswagen, of course, right? A Cadillac costs more than a Chevy. But in the world of colleges, it's not true. It's counterintuitive. The best colleges, the sticker price is about the same for the top 100 colleges, but the financial aid is more generous at the top. So actually, like the Ivy League schools, actually net price, that's after you factor in the need-based grants, is actually less. It's reverse. It's like the Porsche is cheaper than the Volkswagen. So it is completely counterintuitive, and it doesn't follow the laws of supply and demand or economics. So it is kind of a weird, unusual situation. Yeah, and a lot of it has to do with the endowments. These schools have enormous endowments. So when we talk about net price, I'm going to come back to this term several times tonight. So again, it's a legally defined term. So the federal government defines it. So this universities, the colleges have limited flexibility on how this is determined. And one thing I'm going to talk about at the end a lot is going to be the net price calculator. So this net price that's basically what you're really paying. So it includes loans. Yes, you're paying for it. If your student is going to do a work study and make $2,000 a year as a job, that's part of the net price. You should paying for it. Whether your student is paying for it or you're paying for it, your family is paying. Merit grants is sort of a gray area, so I kind of, that can go either way, but technically it shouldn't be in there. But I'll talk about merit grants in a moment. And of course, the parent contribution, what you can truly afford to pay. So the need-based grants are defined to be the institutional grant. So this is money that the school puts up to attract you, to make it affordable. And then there's Pell Grants and state grants. So that's federal grant money purely based on need, only on need-based. So again, the net price is what your family pays after you take out the need-based grants. Net price. Okay. So let's look at an actual example, and I'm going to kind of talk about this more, but I wanted to start off with something concrete. So you're applying to college ABC, and it's $75,000 all in, total cost. And based on the financial aid forms, they determined that the parent contribution is $20,000. That's not including the student in this case. I'm actually separating that out, which is what the financial aid package is. So this is how a financial aid package usually is formed. So a financial aid package, when the student is admitted to a college, which for regular decision is typically the end of March. For early decision or early action, you're talking 6 weeks after you apply. So usually you apply in early November. So you'll find out typically before Christmas for most schools. When the student is admitted, you'll get a wonderful letter welcoming you and a financial aid package. So in that financial aid package, there'll be detail about the components of it. I'm going to talk about what it is, but I just listed it briefly here. So it's the college grants, which are need-based grants, government grants, merit aid, loans, and work study. And everything else is good. Parent will pay for. Okay. Let's break that example down. So if you see that previous slide, that 55,000, I'm breaking it down to make it give it more detail. So this is just an example. The way this splits out varies dramatically. I'm going to give examples later about how it varies. The sweetest spot is the first one. The need-based grant is what you most want, because that's like not the least negotiable. So all the green is the financial aid package. So in this particular example, it's 35,000 is a need-based grant, 14,000 is a merit grant. So merit grant is used as a tool to attract students. So students where they feel that they might go to maybe a more prestigious school, they sweeten the offer by offering merit grant to try to draw the student in. That's how merit grant is usually used, sort of as a tool based on the student's academic ability and other qualities. They feel that they want to get the best students, and that's one way of doing it for a lot of schools. I will tell you this about the merit grants. It's considered somewhat unethical. So the top, I would say 30 colleges or 40 colleges in the country do not have merit aid. So their policy is whatever you need, whatever the true need is, they give you all in a grant. I'll talk more about that as well. So this would not be for a top 30 college, this breakdown here. So this, I just want to illustrate that same slide. If you saw that, the same slide here, we're just talking about the net price. So the net price is captured there. You can see the net price includes everything but the need-based grant. So it includes the parent contribution, the work study, the government loans, and the merit grant. Okay, any questions? Just take a quick pause here. Any feedback, any questions? I know I've said a lot already. Okay, so let me go on to the next part of this. So the question is, how do the colleges know what you can truly afford to pay? And that's the subject mostly of the two financial aid forms that you'll be required to fill out. And again, the primary results of those financial aid forms is this EFC. This is what you really can. This is a fair estimate of what you can afford. So this is another way of looking at the breakdown of the cost. So you have what you truly can afford to pay, and then you have the financial aid package. Yeah. Okay, so the form that every college requires for financial aid is the FAFSA. So even if you're not sure you qualify for financial aid, you'd be surprised how generous the schools are. I mean, some of the more selective colleges, the ones with the biggest endowments, will actually give significant financial aid for up to, depending on your assets do become a factor, but with income at as high as like, I think it was like $280,000. Princeton, I think, is the most generous, and at $280,000, you still get significant aid, remarkably. And that assumes that you own your home that you live in, but limited assets outside of that. So it's more generous than a lot of parents realize. But that's the most generous. So other schools are maybe less generous. So for this financial aid, so you would go to FAFSA and you'd open an account. Let me kind of open that for you. So actually, the form for this, it could get forwarded, but technically it doesn't open for this season until October 1st. So not for another 2 weeks. Yet the form is still here, but we'd have to get forwarded. So that's the season when it begins. So there'll be a new version of this, but you can still look at it and explore it. So one thing about financial aid that is very important and can be confusing to parents is that all the financial aid forms, the FAFSA and the CSS profile, are all done from the perspective of the student. Yes, the parent will often fill it out, but you should be filling out on behalf of the student. The reason why they do that is from the federal government point of view, the FAFSA, though it does give the expected family contribution, which the colleges use, from the federal government perspective, it's used to determine if you qualify for their Stafford subsidized loans, the federal loans, which are very desirable loans, because it has no interest for while the student's in college, and the interest is subsidized after. So those are very desirable. It also qualifies you for the Pell Grant and other things as well. But that's all. But those loans are all in the name of the student. So the student is really the person who is the center of these loans. So it says you, or it says like you are you. It's really the student, not the parent. So be careful about that. So when you fill this out, fill it out for the parent, for the student first. Even though you're filling it out, it's okay. They expect that, but fill it out. Sign up for the student first. Fill it out. And go that direction. Okay. Let me continue. You can take any questions. Okay. So there's the other form, which is longer, which is the CSS profile. So this form is mostly used by private colleges. Not all private colleges use this. but all the selective ones do.
Bill, as you're going, I just want to let you know there's a question in the chat box, and I just want to quickly take a minute. The parent is asking, the FAFSA is the loan which must be paid back, right?
Exactly. So loans, that's a different than a grant and a loan. A loan has to be paid back, but the terms of the loan there are different loans. The best loans, the most desirable loans are the federal subsidized loans. They used to be called Stafford loans. So the amount you can take off, I have a chart, which I'm going to share with you in a bit, but it averages about $4,000 or $5,000 a year for the basic loan. And there's another $2,000 you can add on to that, which has slightly less generous terms. So you're talking roughly like $6,000 to $7,000 to $8,000, depending on the year in school you are.
So I'm just responding to that question, and the other parent, I'm going to post the webinar link into the chat so that you can sign up. Okay. There's one more question. The question is, just because the school or FAFSA indicates loan amounts that could be taken, it does not mean you have to take any loans, right? Is that correct?
That is correct. Typically what happens for most students, what happens typically is the loan you take out, you never see it. The student will never lay eyes on that money. It's immediately applied automatically to the amount that you owe, the bill, the fee. So they never see it. But you don't have to take it out. No, you don't have to. So the student will fill out a form. They'll say, I will take out this loan. I have to sign a promissory note that you're promising to repay the money, all that stuff. But generally speaking, you don't see the money.
Bill, you have another question. Ready? We're going. When is the FAFSA available? Because the parent is saying that they heard that the FAFSA this year will not be available until December. And the parent is asking, is that true?
I've heard that too. And I checked it. It seems like maybe they corrected it. I think at one point that was true, but it looks like they fixed whatever problem it was. It looks like it's back to October 1.
Yeah, that's what I'm aware of. It was always an October test.
Yeah, there was some period where there was some technical issue, glitch or whatever, and it was December. But now it seems like it's back to October. But I would not worry about it because the schools, of course, are not going to hold you to that if you can't send it in. But one word about that is the deadline. So it does vary, but for the private colleges, you know, there's different universes here. There's the public colleges which have different policies. They're much more flexible. And the public colleges generally don't require the CSS profile in the first place. So they all require the FAFSA. But the deadline, the safest play, and you could find out from either Naviance will have all the deadlines or the college website. So you want to keep a spreadsheet. I may have that with me. I may share that with you. I have it loaded up. Yeah, absolutely keep track of that. And what I was saying is that it can never be before the application is due, the financial aid, but it can be at the same time. So prepare to have your financial aid applications done sooner rather than later. So then you submit them independently, submit it independently. So on the FAFSA, it'll one of the questions will ask you to list. I think they list up to 10. Yeah, 10 colleges.
And then the other question in the chat right now is, so is the FAFSA an interest-free loan? And I just want to preface this by saying the FAFSA is a free application for a loan. So it's the level before the loan. It's the step before the loan. So Bill will obviously elaborate, but I just want to explain to you, it's not actually the FAFSA that's the loan, it's the application. FAFSA is the application. It's a free application, but it's the application to the loan. It's like an application to the job. So Bill, if you could please add to that.
Yes. So yeah, it's the free application for federal student loans. Yes, it is the application. So it has two purposes, the FAFSA. One is to qualify you for the loan. I mean, almost all parents will qualify for the loan. The loan is interest-free while the student is in college. It's interest-free for the entire time, and they give you a 6-month grant period after that, grace period, sorry, after you graduate. And then once you graduate, the interest rate is very subsidized. So it's not a market rate. It's like less than half of that. It's like 4%. So it's very, very low, really low.
So that's the last question, but we've had quite a few. So yeah, I'm glad.
Good. I love the questions.
Thank you so much. Yeah. And parents, you can type questions into the chat.
Yeah. Yeah. Those are good questions. So this other financial aid form is the CSS profile. and that's longer, and it's going to be so whereas the FAFSA could take like a few hours, the CSS profile could take a day or 2 days. You need 2 years of information, and it's ask a lot of questions about assets, the home, your primary home, your second home, your business, your investments. So it gets into details, your students' investments, everything like that. So a lot of it's in there. And it's not really that clear, to be honest with you. The CSS is not really that well written. So it may require more time just to suss through it. And there are some facility there to answer questions and explanations, but it can be tricky. I'll just say that. So yeah, this is what the page looks like. Let me click on this link just to show you. So this is ready now. So a couple of words about this. When you, again, I want to repeat something I said earlier about the student perspective. Both forms are in the perspective of the student. So it's you is the student. When you sign into this is very important what I'm about to tell you. So if there's one takeaway, please remember this. The CSS profile has to be, when you log in, you have to use the same credentials as the student used for the SAT. If you don't, you're going to have a lot of trouble. Trust me on that. So this, your child has taken the SAT or the PSAT. They have a login credentials. They have a username and a password. You must use that, please. You must use that. It's not the parent, and they can't make up a new username. It has to be the same. It's going to create a host of problems if you don't do it that way. Okay, that's a good tip. Okay. You get started on it. I mean, you can make a dent on it just to get started. We can help you. We, Kweller Prep, we're experts on this, and there's a lot of strategy, perfectly legal, but ways that you can save money because the cost can be enormous, and guide you through the process. Okay, so I'll talk a little bit more about the financial aid package. So every college is different. This is somewhat frustrating. Let me get into the detail about that right now. So we're talking about this financial need business here. So the financial need, so you have a financial need. So the question is, how is that need met? That's where it really varies among colleges. So you have this constellation of sources of money, work study, the loans, the SAFR loans are the federal FAFSA loans, need-based grants, federal Pell grants, there's college merit grants, and then there's federal plus loans, which are parent loans that are not as generous as the SAFR loans, but they're loans. So there's many sources. It's everything is ultimately not for everything can be paid for. And I want to reiterate something that I've said before. You get sticker shock because the numbers are so big. But keep in mind that colleges really bend over backwards to try to make it affordable. And number two, think about it as an investment for the future of your child, which what can be more important than that. So this is a good slide here. So I actually talk about this. I want to jump to this first. You've probably seen this before. So the U.S. News rankings are like the gold standard. It is controversial because colleges pay a lot of attention to it, and they want to position themselves because students pay a lot of attention to it. So it's like kind of a way of measuring how selective the college is, the quality of the students in terms of how ambitious they are. And for the purposes of our conversation now, it's a measure of how generous the financial aid is. So the more you move up on these lists, the more generous it is. And I'll show you in that slide. I just showed you what I mean by generous. So this is why these lists are important. And also it's a dividend that you get if your student has done well in school and outside of school, and the application is strong, and why it's one of the reasons why it's good to go to a more selective college is because the aid is more generous. So let me go back to that slide here. So on the left, I just do three kind of like basic examples. So on the left is the most selective colleges, and on the right are less selective. So you can see that in this case here, so the example I'm giving, I just want to give one example where the family contribution is 25. The expected family EFC is 25,000 for this example. This is just an illustration. So for a school like Brown or Duke or Northwestern on the left, yeah, the 10 at the top is what you can afford to pay, 25,000. All of the rest they write off as a need-based grant. So you don't take out loans. Nothing's a loan. They're loan free for the most part. And I mean, it's like it's sort of an ideal world, and not too many colleges can afford that. So you're talking about 25 colleges in the country, basically, give or take. And then as it gets less selective, see what's happening. The FAFSA is what you can afford. It's the same. So notice the tan is the same in all three of these bars. But then the need-based grant shrinks, and they start to provide other sources that you could have to come up with. So the merit grant, it could be 0 to 10, depending on how strong the student is relative to the other applicants, or the other accepted students. And then the loan amount can vary. So the loan for the FAFSA, the federal loan is roughly limited to 5, but then you have to come up with other loans. So that would be like a plus loan, or just take more out of savings. Okay. So this is a good graph in that sense, just showing you what you can expect. You know, the package is different. And one quick word is, so if you apply early decision is binding, so you can't really negotiate the financial aid package. So that's one argument against early decision. There are, of course, arguments in favor of early decision. This is binding. But if you apply regular decision, you say your student is accepted to 5 colleges. They're actually very willing to. It's negotiable. So if especially if you make a commitment, so you have college A and college B, and your student prefers college A, but they're not as generous. If they can actually do a screenshot and share the financial aid package of college B, very typically college A will match it. So that's a very good, another like kind of insider tip, a pro tip there to use. It is negotiable if you apply regular decision. This is something I touched on earlier about the selectivity. So this is private colleges here. So the more select on the bottom, selectivity colleges basically roughly corresponding to the US News list. When I say selective, that's what I mean, how high you are ranked. So the schools at the bottom, like I showed in the graph, it's all 100% is need-based. But as you go down that list, it's becoming less and less need-based. So that's what this curve is really showing that. Any question about that? It's hard to follow this sometimes. Yeah, the 529. So a parent is asking about the 529. So the more money you have in the 529, the better, because that's the interest gained is not taxable as long as you use it for college expenses. And so that's planning ahead. So if you plan ahead, then you're in a much better position.
And I just want to remind parents, we had a whole entire webinar about the 529. So we had a whole separate workshop about that. If you missed it, we are going to run it again. But we did run a very in-depth webinar on the 529 on a separate time. So this webinar will not be covering that.
Yeah, other than just mentioning the 529 is a wonderful thing to have. It has enormous tax advantages, especially if you're in a high tax bracket. The interest gained is tax-free. So that's a nice thing. Yeah. This slide is just gives you a snapshot of how the net price varies. So the net price varies a lot. So you can see the numbers here. Amherst, the net price. This is for an example of 90,000. You have 90,000 income and minimal assets. 90,000 in household income. And so it's private colleges. When you do state universities, it's meant for in-state. So I'm going to talk about that in a moment. How state colleges affect out-of-state students in a moment. But you just see that the numbers vary a lot. So that could be a consideration where you apply. So you want to go and find out that number. And we'll talk about how you get the net price in a moment. Okay. So again, just to remind you, the net price is the true amount that you pay. So it includes loans, it includes work study. You know, the net price is all the money you pay. So the federal government is defining it legally, so they don't want any shenanigans. So it's very strictly defined. This is something I referred to before about Princeton. Princeton, I think, has the most generous. Of course, it is the most prestigious. I think it's ranked number 100 on the list. But if you can see, it's even at $250,000, it's still a pretty generous total here, right? So gross family income, percent qualified. So 43% with making 250,000 and above. And the average grant was $28,000 at that amount of money. Quite extraordinary. This is the extreme in generosity. So other colleges will not be as generous, unfortunately. So this concept comes up, okay? Needblind versus NeedAware. So this is sort of like if it's Needblind is sort of an ideal state. What it means is that when you apply for financial aid, Needblind means that the college does not consider your need in making the admissions decision. This does not have to do with how generous they are, though it's highly correlated with generosity, but it doesn't have to be. So when you apply for aid, for the vast majority of colleges, that will actually affect your student's chance of admission. Oftentimes just a little bit. But only about 30 colleges, there are about 500 private colleges in the country. So only about 30, okay? So maybe 5% are Needblind. So it is sort of like the ideal state. One thing to note, this is private colleges. Public colleges are all Needblind for in-state students. Like all the SUNYs are Needblind. The SUNYs and CUNYs are Needblind, of course. Okay, so there might be a question about that. Okay, let me talk about this slide. So this slide is an interesting slide because, you know, I made this slide originally about 5 years ago, and the New York Times about 2 months ago published this work. It was based on the work of some Harvard and MIT researchers, and they had the graph that basically looked exactly like this, almost as if they stole this. I know they didn't, but and it was a lot less clear the way they presented it, but it had this basically.
They definitely stole it. They definitely took it from us. It's the best form of flattery. So everyone, pay attention to this.
Yeah. Yeah. So I thought this was quite controversial, but it's at first, but now I'm totally comfortable with it. So this is it's kind of an illustration to take it somewhat with a grain of salt, though the Times basically backed it up. That they didn't put these. Yeah, I mean, basically they have the same slide. What it's saying here is that the curve is a measurement of how much your financial need affects your chance of admission. So it's not going to eliminate you from chances. So you can see here it's like 20% up or down. So if you have no financial aid need at all, it will improve your chances of getting in, all else being equal, because there are a lot of other factors that offset that. But I'm just looking at that in isolation. Students in the middle class are the ones who are squeezed. So if you're in the middle class and if you're in the middle class, you're not going to be able to afford $80,000 for the course for a course of attendance. So they're going to need financial aid. And the way to look at it is most schools are limited in their financial aid budget. So they have a fixed pie. And just from their perspective, I mean, it does make sense when the budget is limited. If you think of it this way, so the financial aid, say they have, I don't know, say $60 million in aid to give. And it comes down to a student. One student needs 60,000, and then you have 3 students with 20,000. So they can get those 3 students in at 20,000 for the price of the 60,000. That's one of the ways they have to think about it. Though again, it is limited in what it does. So it's not going to, it's 20% down chances. So it's not really a game, it's not going to like not get you in. But I just want you to be aware of that. And then students with high need have faced typically high socioeconomic challenges. And that is something that's desirable, to diversify the class, and they understand you have the challenges. And at the end of the day, the colleges really want to make it work for everybody. They are very egalitarian. They really do try. And that's what this slide is about there. Okay, this one I mentioned at the very beginning about SUNY. So a lot of parents see the price, the sticker price is less, it's significantly less, right? However, when you do the net price, which we're going to talk about in a moment, the net price that's after the grants, it's actually not as good of a deal as it first seems. So this is examples: $100,000 in income, net assets of under 150,000. This is just one example. But a top 30 college will actually be cheaper. So that's kind of a shock. And even if it's a top 50 college or a top 60 college, it's still about the same price. So well, the point is this is you should not think about a college just for the price. Fly to multiple colleges, use the net price calculator, which we're going to do in a second, and think about the price. And also you want to pay for something that may change the career, because a slide that I'm not showing that I do have, but I didn't show it tonight, but just to summarize a slide about the lifetime value. So going to a more prestigious college on average, there's so many exceptions. That's why I hesitate to show the slide. But on average, if you go to a top college, it pays off in the long term. In other words, the lifetime earnings is just one measurement. I know it's not everything, believe me, but it's one way of measuring success, one way. And for the top colleges, generally speaking, the outcomes are higher in terms of both job satisfaction and income. So it's an investment in the future. So if it's a little bit higher, say it's $10,000 a year higher or $20,000 a year, think about 50 years of working, what difference that will make. It's probably pale in comparison. All right, so just something to think that. So the question is, how can I find out how much you'll need to pay? So the answer is, can you do it? And the answer is yes. How? Well, let me go back to the net price. So there's something called a net price calculator. And parents who don't know about this will be pleasantly surprised. It is required by federal law. So there isn't a single college in the country that doesn't have it. And it has to be accurate, or they can get into hot water with the government. So it is accurate. So I'm going to give an example in a minute. I'm going to just take this opportunity to remind you what the net price is. So the net price is defined to be the cost after you get out Needblind grants. So that would include loans if it's in a financial aid package. So the net price in that example I gave in the beginning. So just take away what they give in need-based grants, and then you have the net price. So you gave that example before. Okay, so the way to find it, the easiest way to do it is if you search, you go to any college website. So we go to, for example, University of Rochester or Carnegie Mellon University or Cornell or Stony Brook. You look it up, and I'll give you an example right here. I'll do it in a moment. But you go to that website, and you can either search in the admissions pages or just go to the search box. Every website, every college website has a search, and just type in the words net price calculator, and it will appear. And they're usually pretty short. Typically, schools will have two versions. One is like a quick version, and one's a longer version. The quick version could take 10 minutes. The longer version might be 25 minutes. But once you get the hang of it, the questions appear over and over again. You can even open an account, and it will save the information, so it makes it much quicker. Account with, I think it's with the College Board, actually. They do that. So Binghamton is really short, so I have to navigate to it. So a school like Binghamton, they do not have the CSS profile. So it's really a very short form. And Northeastern, that's a college. So Northeastern is in Boston. It's a private college. It's unusually large for a private college. So it has about 15,000 undergrads. So let me see here. I didn't open this before. So this is just a good way of just example of a good example of what you can expect, kind of. So go to if you go to northeastern.edu, and just kind of let's explore this together. So just the two ways of doing it. So you can see the search box right there. So I could actually type in net price calculator, or you could navigate to it. I can kind of show you how the navigation works. So you can see down here, there's information about it. So this is the quick and dirty one. It's called My Intuition Cost Calculator. It's much quicker. You probably get the same result, but just for simplicity purposes, you click on that. let's just do this very quickly together. So U.S. citizen, your current living situation, I live with your parents, say. Again, everything, this kind of echoes what I was saying before. So when you're doing financial aid, it's from the student's perspective. Unless they specifically say, your parents, etc. Say no here. Say have one, well, just say one, not no siblings. So annual income, say $100,000. You own the home. You could say yes. Yes, I'll just put yeah, some simple, common answers. Say no for that. You have investments. We can go really quickly here. Current market value of the home, say 500,000. Remaining balance, say 300,000. So the equity is 200,000 in this case. Usually there's an exemption on the home. It varies by college. So the CSS profile basically feeds the information to each college, and each college has their own algorithm, which will create different net prices. I just say this is small, say 50,000. So this is just 20,000. The retirement is exempt. They're just asking that for a question, but retirement money is 100% exempt. So that's good to know. There's another little insight. So if you want to transfer money in, this is, you do that would be sorry. So here's an example. So keep in mind, they said you're $100,000 for household income, and we have $200,000 owned in your home. So this Northeastern is going to give you, you can see the net price here. So the need-based scholarship is about 38,000, and the total cost, let me scroll down here. The total cost is 75,000. So the net price is like 37,000. So this is basically 50%. You can see from the blue, it's about half of it. So they're giving you 50% on need-based aid. So you will need to come up with, for that case, 37,000, which is a lot of money. What this doesn't factor in is merit aid. So a lot of people are nervous in seeing this, and I'm saying to myself, I better say something that's nice. And that's one thing I will say. So the merit aid is through the roof. They give these schools like Northeastern, sort of in the middle. They're not top 20, but they're a very competitive school. It's an excellent college. They're going to give a lot of merit aid. It could be 20,000, it could be 15, 30,000. It varies, but there will be a merit aid offer. I can almost guarantee it. Okay. So there it is. That's an example. This screenshot, by the way, is from Wesleyan University, another great college in Connecticut. Okay. I'm going to just go over some quick deadlines here. Okay. So each college is different with the deadlines. If it has a CSS, I would basically don't count on it being much past the deadline for the application. So if you're applying early decision, for example, November 1 is the deadline often. So then you could expect to submit it November 1. Usually sometimes it's a 2-week grace period, but don't count on it. But you check on the website to find out. And it would also be in the FAFSA would have it. When you do the FAFSA, it will be included in the FAFSA. And it's on Naviance. So it's many places, but I definitely would do a spreadsheet, but you don't want to miss it. You miss the deadline. Okay. This is something I'm circling back to, the EFC and the direct of the student loan. So this tells you what the student loan is. So when it says here, look at the bottom here. Do you see the 2,000? It says direct unsubsidized loan. That's what they call it, but it is subsidized. Let me explain why. So when they say subsidized, they mean that the interest is paid while you're in college. So this $2,000 loan, the interest is not paid, it accrues, but the interest rate is subsidized a lot. So you're only paying like, I don't know what it is, 5% instead of, if a student were taking a loan, it could be 12% or higher. So yeah, the interest rate is subsidized, but the direct subsidized loan, you do not pay interest while you're in college. You can see it goes up in your junior and senior year. So junior year, you can take out $7,500 in federal loans. And I just listed the other options to pay. So believe me, there's a lot out there. So the plus loan is a federal loan, but it's not as generous. It is subsidized still, and it's guaranteed. So in other words, you might not even qualify for a loan. You would qualify for a plus loan. It's guaranteed by the federal government. In other words, it's guaranteed that you'll get it. It's 100% guaranteed, and the federal government is guaranteeing it. So of course you're going to get it, but the interest rates are higher. Private scholarships, that's something that's not as wide as available, but there are private scholarships, especially for like Knights of Columbus or your company. If a parent works for a big company, they often give money for their employees, for their children employees. Yes. TAP is the program for the state college grants, but it has a very sharp income limit, 50,000, which is pretty low. Work study. Yeah. Many students are in work study. So it's a job on campus. It could be everything from being a TA, working in the cafeteria, the library, and it's usually about $2,500 a year. Usually like 10 hours a week, kind of on average. This sheet here, I'm going to give you this document. Let me give you this, and I will share this. So this is sort of like a summary of it's like a summary. I'll just put down summary of financial aid sources. So like that. Yeah, so you can see here, when it comes to private colleges, you're really in the bottom grouping. So the need-based grants, that's institutional grants. It's paid for by the college itself. They have an endowment, and this is part of what they do. They want to get the best students, and they don't want to have your finances interfere with that. So they're very, very generous. It really is it's surprising, but it really is generous. They're giving money away. The thing about this is crazy. They're giving money to advance students, their lives. It really is somewhat remarkable if you take a step back and realize how nice this is. They're paying you to advance your student. Okay. Yeah. So let's see here. You got different. I mentioned this earlier. So you get different financial aid offers. That's definitely going to happen. Your offers are going to definitely vary for sure. No question. And for regular decision, you'll have the ability to negotiate that. They expect it, and it's not considered haggling. It is very considered very ethical to do that. I just want to talk about public colleges. So some of the best colleges in the country are state colleges, not in New York State. I listed just a few of them there. So a lot of them take quite a few out-of-state students. The attitude of these state schools is it's paid for by the state. So the state, University of Michigan, University of North Carolina, Rutgers, which is University of New Jersey, Penn State, Pitt, they're funded by the state. So they're going to favor state residents, and they're going to give their generosity of aid is going to be to in-state residents. They do take a lot of students out of state, but the financial aid is very stingy. So I just want to give you a heads up on that. So they're not nearly as generous. So if you do need significant financial aid, this may be a problem. They do give some scholarships, but it is limited. Okay, that's just something to be aware of. They're great schools. So I hope it was helpful. Any questions? You could call and go back to the beginning. Yeah, put the number, and let me put that. That's the yeah. Let me put the number at the. Let me go back here for a second. So yeah, let me just go to the first slide.
I'm going to join Spotlight with you as
well.
well.
Here it is. Yeah,
and
please.
I just want to give you guys some closing remarks as well as those inputting the information. Before I do my closing remarks, which will be a torpedo of information, I want to show you my cute little children. Hello, children. Wait, this is very important. I'm going to cover them. Ready? Hold on. Wait, this is a very important moment. We're going to see the Kweller Prep children. I just need to figure out how to do this. Here, background. So no background. Hello. This is me. And then, guys, give me a moment. And then I'm going to give you a torpedo of information. But I want to take a moment of joy. and show off my errors. Okay, ready? Spotlight for everyone. I'm spotlighting myself. Am I in spotlight? I'm in spotlight.
Oh.
Okay, guys, ready? We're gonna see the children. Jacob,
Yeah.
hold on. Hold on. Wait, guys, ready? And then we're gonna switch. We're shifting gears. Ready? Ready? This is very important. These are the errors. Nope. Da, secondo. Hold on. Fine, I'll do the errors in a moment because I need to. One moment, guys. Hold on. Jessica, come here. Jessica, darling. Sorry, guys. Oh, fine. No errors. All right, ready? Number one, as I'm waiting. Okay, this is what I want to tell you. A couple of things. Ready? This is very important. Number one, you should know when you take AP advanced placement classes. Oh, you know what I'll do with the children? I'll have them repeat what I say. When you take advanced placement classes, Michelle, repeat what I'm saying. When you take advanced placement classes, you get college credits and you're going to save tens of thousands of dollars by taking advanced placement college classes. Next. When you take college now, when you take college now classes in 11th and 12th grade, Bill, am I in spotlight?
Bill, am I in spotlight?
Yes. Yes.
Okay, when you take advanced placement, you can save tens of thousands of dollars. If you get a 4 or 5 on your AP exam, can you do it together? Repeat after me. Go, Jessica. When you get a 4 or 5 on your AP exam, and when you get a 4 or 5, you can transfer the credit, and you can also fight the college to transfer the credit. So you can actually negotiate how many credits you get transferred. Let's keep going. Ready?
Ready?
More.
More.
College now credits are going to transfer. You can take college now classes from 11th and 12th grade.
Okay, I'm gonna eat my mac and
Ready?
cheese.
No, another 2 minutes. You can take college classes in 11th and 12th grade, and those credits will transfer. Any AP exams where you just take the AP test, any AP exams where you just take the AP test, you don't have to take the class. This is very important. You don't have to take the class. Ready? Michelle, repeat after me. You don't have to take the class. You can take just the AP.
You can take just the AP.
So in October of every year,
you
can sign up through the College Board just to take the AP exam. And then in May, you take the AP test. Is everyone following along? Then you take the AP. You get a 4 or 5. And then you can get transferable college credits. College now classes, easy transfer.
Easy transfer.
So there are many ways. If you want to be a residence advisor. If you want to be a residence advisor, you can also save $10,000 on housing. Housing is very easy to get for free at college. You can apply to be an RA. Got it? Are you guys learning something? Jacob, say hello.
Hi. When you move that video.
Okay, everyone.
Yeah.
With that being said, did I miss anything, Bill?
No, it was fun.
Oh, wait, there's more. I'll tell you a little bit more. You can, I also want to add. So when you get into college, you can renegotiate the financial aid once you're in the college as well. So let's say you get into Hofstra and you get into St. John's, and one school gives you 30,000, another school gives you 3. You can take letter A, which shows you 30,000, and you can actually give that letter to the other college. So you can actually make them jealous, and this is totally fine. So you can show them that you have a better offer from another school. So there's another thing you should know. The more colleges you apply to, the better. See, this is what very few people will tell you. When you apply to many colleges, you will get a variety of financial aid offers, and then you can negotiate the aid from school to school. You should also know you can take summer classes, that saves money. You can accelerate your credits. Winter classes, that can save you money. You can accelerate your classes. So what you can do is front load. Another thing you should know when you're actually in college, some students, they only take 12 credits, but when you get tuition, I'm just giving you rough numbers, by the way, I could be wrong on the credit number, but for example, so you're paying, let's say, $20,000 in a school and you're taking 12 credits, but you can take 16. So technically you can add a class and you can get those 4 credits. Another thing you can do is you can pay a little bit more and take 18 credits in one semester. You can even take 20 credits. So you can always like get more bang for your buck by taking more college credits, and then you can graduate early. If you graduate early, you shave off an entire year off the tuition. So I'm just giving you some ideas so that you, just off the top of my head, as my 3 kids are in the background, that there are ways for you to always save money on tuition. You can actually renegotiate your financial aid award every single semester that you're in college. And if you get straight A's your first year, they don't want to lose you. Another thing you should know, on the US News and World Report, the last thing the school wants to do is drop in rankings because they don't have retention. No college wants a situation where the students go to college and then they decide they don't want to come back the following year. It actually drops the ranking of the college when kids drop out after a year. So what you can do is enter the school the first year, and then you can play hardball with the financial aid. There are more than one thing that you can do. So remember that. I want to add one more thing about the 529. I just want to make sure, Bill, you hear me, right?
Yes.
I want to add one more thing about the 529. So we had a separate webinar. You should know the 529 is an incredible legal way for you to shelter money and income and holds money not only for your child's college, but you can also hold this money for your child in graduate school. So I really want to make it clear, 529 can also be a retirement tool for your child. So you can really, I'm just going to get away from my kids. You can really set your kids up very, very well as you are navigating the, college game with the 529. So I really just want to make that clear to you that this is a big opportunity. We did have a whole webinar about the 529. So if you missed it, we are going to run it again in a few months, but just remember, this is a big deal because the 529 is not only for college, but you can use it for law school, med school, whatever graduate school you want. You can even use it for private school, but separate and apart from that, you can use the 529 for your child's retirement, which is really crazy because you can transfer really well if you can set your child up for a very, very, very long life. It's really an interesting tool that you can use long term. And every state has a max. I think the tax deduction's up to 30,000 if I'm correct in terms of numbers. I don't have it off the top of my head, but I just want to let you know, like really look into a state sponsored 529 plan. And then there are plenty of people who can privately do it. If you want, you can email me. I'm happy to forward you the contact information of, who I use and who I set everything up with. So just remember that as well. But these are really fascinating tools. So, I don't know. I feel like I covered a lot of ground. Everyone, you hear me, right, Bill?
Yes, I do.
You're
yes.
good.
Yeah.
So I really just want to add, if I have 60 more seconds, I want to go rather quickly. During the 529 webinar, one of the parents from Kweller Prep spoke about her 529 experience. It was very interesting. So come here, Golsey, come. Close the door, close the door. So the 529 experience with the webinar was very interesting with his parents because I knew her as a married mother with 3 children. During the course of my time with this family, the mother and father got divorced, and the dad actually sued to break the 529 to take 50% of it out. And he actually filed 3 legal motions to access this money, and he was unsuccessful. I really want to mention this to you as we close up the webinar, because give the 529 plan a really deep look because it's just legally heavily protected money. So the child was no longer a child. The girl was 25 years old when the father sued to try to open the account and divide it by 2. And the child had already, I don't want to say child, but 25-year-old had finished college. The way that things played out after 3 legal motions was that the money from the 529, the child could use at 30, 35, 40 just to go to grad school. It's almost like an indefinite amount of time. So just keep that in mind as you're planning long-term. That's a very special asset protection tool. And I really learned a lot during that webinar. With that being said, if you guys have any questions, let me check the chat. I'm going to go back in my background. All right. It was actually a really good webinar, Bill. When you were away, that's when we ran it, when you were traveling. But it was a very, so the 529, correct, it can become a retirement account. I'm just letting you know this is a very fascinating way to really do a deep dive and learn about that, because it's a really interesting tool for protection. And it was just fascinating to see that it's protected. You're not even a child. This is literally a girl who's 25 years old. Okay. I don't have all the numbers with me because I didn't, I had a guest speaker for that webinar, but I want to say it was like 30,000 per family. I think it was something like that you can do as a tax deduction. And it's, I don't have it in front of me, but you can just look into it independently. So I'm looking at the chat box if there are any other questions. Do we email the College Board to sign up? So you can go to like BASIS High School, BASIS, and they'll let you take an AP exam. You can go to any private school. You can also kind of just fight with your school. So, and you can make your own high school next month, like administer an AP exam. So just keep that in mind. I know Townsend Harris does, like they'll do bonus tests. Stuyvesant's very strict on it, but you really do kind of need to make it clear with the school that you want your child to sit for the AP. I mean, it's thousands of dollars you could be saving. I do want to add one more thing. Ugh, am I allowed? I'm scared. I know I went over time. I want to add one more thing. Sometimes the fighting is worth it. So like if you don't get into an AP, just remember, it's really going to be a disadvantage to be taking 4 credits worth of calculus when you're in college. You could have taken that in high school. So, Calc AB, by the way, AP Physics is like 8 credits. It's not even 4. I'm pretty sure NYU will give you 8 college credits. Like you really get a high amount of college credit by taking high level courses. So just please keep that in mind as well. The more you do in high school, the better. I think that's the last thing I want to say. The more you do in high school, the better, because you're positioning yourself well for success when you're 18, 19, 20. And that's really important. You want to make sure that you go into college with a plan and with an intended exit goal, because the way college works is you're spending tens of thousands of dollars not to take like a juggling class, right? You want to go in with a plan. This is big money that you're spending, your time and your youth, which you're never going to get back. So on that note, I'm really thankful for all of you listening to this webinar. I hope that you're getting a lot out of it. I hope that you're getting a lot of wisdom out of it. And I'm very grateful. I'm so thankful that we have Bill. Thank you so much for this time and generosity and all the wisdom that you provide. I'm really glad that everyone made time to be in this webinar. Thank you. Thank you to all of you. Okay. That's it. Thank you. I want to take one moment as we're about to depart. Bill, I'm going to take everybody off mute. We're going to count to 3 and say thank you, Bill. Ready? So we're going to count to 3. Oh, I could bring my kids back into this one. Ready? We're going to count to 3 and we're going to say thank you to Bill. Ready, everyone? 1, 2, 3. Say thank you, Bill.
Thank you, girl. Thank
Say
you.
thank you, Bill.
Thanks, guys.
Say thank you, Bill.
Thank you, Bill.
Say thank you, Bill.
Thank you, Bill.
Bill,
Thank
say
you.
You're welcome. Thank you. Being here. Yeah.
Bill.
Thank you, Bill. Say, Bill, you're the best.
You're back.
Bill, you're the best. Okay. Thank you, Bill. Bye.
Okay. Take care, guys. Take care.
Bye,
Be safe.
everyone. Thank you.
Bye.